this is Ria from Samaya, MCQ 26 CF final. SK Private Limited is a mid-sized company where index is applicable and internal financial controls were also applicable. In audit, they decided that observations of auditor are discussed with the management, that's fine. And auditor started the risk assessment and asked management to share the documentation of the same, but the management were uh, said that they did not find any kind of risk. Auditor were not convinced that the responsibility of management is to prepare the financial statements and design, implement and monitor the internal controls. So here, what the management said is not correct. So we have to resolve this matter. The requirement of it audit team is not correct, is not wrong. The view of management is correct, no. The view of management is correct because applicable to internal reporting, no. The view of management is not correct, yes. D is the appropriate answer. This is Ria from Samaya, MCQ 27 CA final. A Private Limited is in telecom industry and there were statutory auditors for the year end 31st March. They want to commence the work in March and complete it by May. The audit team signed the audit report on 5th May when the engagement letter has to be signed. Engagement letter is something that contains scope on terms and conditions regarding the engagement. So it has to be signed before commencement of the audit. Commencement of the audit, A is the appropriate answer. At least one day signing report, no. Before signing financial statements, no. Engagement letter, financial statements were prepared by management and engagement letter is optional, no. It's compulsory. A is the appropriate answer. Hey Samsung, this is Ria from Samaya, MCQ 28 CA final. RM Private Limited is in manufacturing of water bottles. It's a subsidiary of RM based Germany, where for the year ended 2021 carried out a physical verification of inventory and PPE. During that, statutory auditors requested for document changes in process of activities, but the management told the auditors that this documentation is maintained by the parent company. The parent company would take due care in each and every process. The auditors did not agree with the views of the management. So we have to see our advice. Auditors to look documentation as per Sarbanes-Oxley Act. Auditors are correct. In this case, management should require documentation. Auditors are correct in this case. However, in case of parent company covered by Sarbanes-Oxley Act, management is correct. Don't worry if you find any Sarbanes-Oxley Act. We do not have that in our syllabus. Option B is most appropriate answer. This is out of syllabus, this is out of syllabus, and the management is not correct. But what's the point of providing a copy of changes in documents or internal controls where the management is responsible for maintaining internal controls? Option B is appropriate answer. Samfam, this is Ria from Samaya, MCQ 29 CA final. X Private Limited is trading in parts of machineries and its purchase demand is expected to develop new suppliers in order to meet customers' demand. Internal audit of the company identified frequent changes in bank account and master details of suppliers. So the management agreed to develop a process of monthly detailed review of supplier master changes done. So there was something that had already done and they want to develop a control over that. So they want to detect who had done that changes. So one of the members of the management would like to know above controls fall under which category, whether it's automated control, preventive control, detective control or compensating control. It's mostly a detective control where the loss had already taken, all changes have been taken and they're trying to react to that. So it's a detective control. C is the right option. Now from the Ria from Samaya, MCQ 30 CA final, the management of M Limited had strong internal control that no individual employee to handle a task alone. CAO has been appointed as an auditor for the financial year 2021, where Olive decided to use internal control questionnaire. And what are the questions that need not be framed while forming the questionnaire? Are authorized signatures for purchase limited to elect or authorized signatories for purchases limited to elected officials? Yes. Are payments approved only on original invoice? Yes, that could be included. Does authorized officials thoroughly review the documents signing the checks? Yeah. Here are few where the monthly bank reconciliation implemented by for each and every bank account for the company. It could also be done on yearly basis, and it's mostly dependent on for the financial and accounting department. For something that's operational, these three could be asked. So the question that need not be framed is D. Hey Samfam, this is Ria from Samaya, MCQ 31, CA final. Where while auditing medical expenditure, medical reimbursement of a company's employees, and few bills were not medical in nature and they were overwritten. And mostly these bills were from a functional head who enjoys higher medical reimbursement. What you have to do while you come across such overwritten bills? Either you have to accept the explanations, no, you need not accept that. Recommend to claim that has to be reduced and clear guidelines for disciplinary action. It's like a remedial for the internal control system. This is what we should do, and recommend the employee to be asked to freshly submit the bills to avail the tax. You are not the management, right? So you cannot take decision on that, and you are not also government to make them get taxed. So as an auditor, you have to put remedies for the internal control deficiencies. So it would be the most appropriate answer. B is the appropriate film. This is Ria from Samaya, MCQ 32, CA final. Adequate design and effective implementation of internal controls may not lead to identification of frauds and errors, design and implementation gaps, abuse by process owners, segregation of duties. You see, these were all, this is mostly intentional one, right? Abusing by the process owners. This is where we cannot find out. These frauds and errors we can find out, and design and implementation gaps can be found out, and even segregation of duties is normal internal control, but abusement by process owners who have to follow the internal controls, we cannot identify that. So option C is an appropriate answer. Confirm, this is Ria from Samaya, MCQ 33, CA final. K Private Limited is a large software company which operates in a fully automated environment with 2,100 CR turnover. And for the year in 2021, auditors during the process of audit found audit evidence mostly in soft copy. There was no regulations whether you could get audit evidence in a hard copies or soft copies only. It could be a mix of both and one. So if you have to, they were thinking that in a fully automated environment, the document should be only in soft copy, but it should not be, it need not be that. So the matter of documentation should be soft copy only. No, not necessarily. It could be a mix of both hard and soft copies. B might be the appropriate answer. C, operating in fully environment. So it's to check them with, because the document have come from client only. As per the documentation, everything should be automated accessibly at any point of time. So they are saying they need not maintain the audit requirements not required, and it's important to check them with client only. It's not the case. You have to do audit documentation as an auditor. It's your responsibility under a standards. So B is the appropriate answer. MCQ 34, CA final. K Limited engaged in e-commerce business. It has ERP package. It want to upgrade it to SAP version. So KPP associates or strategy auditors for the year ended 2021, they wanted to conduct the audit by understanding the SAP systems. The management was not comfortable with that approach and suggested auditors to limit their understanding and perform audit procedures. In the given, please suggest your course of action. Actually, as per SA 300 Series 315, you have to auditor have to understand the business environment, including its internal controls. So there's no problem in K associates auditors going through the SAP walkthrough process. So the approach of auditing for detailed understanding, if they don't understand, they cannot properly implement the audit procedures. I think this is most appropriate one. We'll see the others. Management considers seems reasonable now. As a private company, auditor should have knowledge and should not get this process of obtain detailed understanding. No, they have to obtain the understanding of business environment. Our team should work with IT experts. Involvement of IT is mandatory. No, there is not mandatory, but it could be an recommendatory nature using the work of audit experts. So the most appropriate answer is option A. Maya, MCQ 35 CA final. A Limited is a medium-sized company which has various warehouses which maintains 2 to 3 months of inventory. The internal controls were both manual and some were automated. Audit of 2021, auditors raised queries regarding process that the auditor considering either only manual controls or only automated controls. The management have adopted both the manual and automated controls. The controls should be in effect. They were saying that the auditors are saying that the controls were considered ineffective as they were few manual and few automated. Provide your inputs to resolve this matter. The approach of management doesn't seem to be correct. No, a few. It seems to be correct. Why? Because of internal controls could be of manual or IT dependent controls, or it could be of automated also. So there could be a combination of both. So the management should have company follows should have approach to companies that there's no regulations or rules regarding that to take permission. The approach by management is correct, and they cannot limit only to manual or only to automated. This might be an appropriate one considering the size. Approach of management is not, no, management approach is right. So option 3. Hey Samfam, this is Ria from Samaya, MCQ 37 CA final. Our limited engaged in manufacturing of cranes, where the significant in transaction amount but not the number of transactions. Auditors were using CATs, which to analyze some data, and the client refused to provide any such information because these all tools the audit were using, any outcome needs to be handled by themselves, and the management is not cooperating with the CAT techniques. So we have to advise for the dispute. The management is ready to provide other information for the tools. No, CATs were used mainly for auditor to use of audit, so management have to provide such as assistance. Management is not right. Management is not right. Auditors are correct. Yes, because audit tools, they perform the audit procedures. They should not. This C is the appropriate answer. This is Ria from Samaya, MCQ 38 CA final. Mr. C appointed for statutory audit of K Limited for a term of 5 years. Now this year he acquired 55% of share and to accept as a director. Whether any violation of code of ethics. He cannot be an auditor because of the pooling period session 5 years, and he cannot be a director also because when he was an auditor. So this option A might be the right answer, is an appropriate answer. Yeah. This is Ria from Samaya, MCQ 39 CA final. ABC Private Limited uses in-house developed application system for accounting. The auditor observed that user ID password is mandatory to access the application system. This is they are preventing the inaccess or unauthorized access to the applications. So general IT controls or application controls were discussed in full and chapter of automated environment in our channel. Detective control were when after a fraud or something abusing the powers have taken place, we use that. Preventing is before that. So this is preventive. D is the right answer. Hey Samfam, this is Ria from Samaya, MCQ 40 CA final. X Limited uses ERP software which were maintained by third parties. Statutory auditor is not confident about the risk management process in third party organization. This relates to SS 400 series, and the organization is regularly conducted and it's ISO certified, and what the auditor should do is that he need to obtain the service organization control report. So do not ask anything else because it's third party. No, not correct. Insist in conducting audit in third party. No, but everybody cannot do the third party client audit, right? Every auditee. Take ISO certificate that doesn't serve for any purpose for registration about internal controls. Take the service organization control audit report to review. This is an appropriate answer. This is Ria from Samaya, MCQ 41 CA final. As per section 130, reopening of accounts, the company shall not reopen its books of accounts and not recast its financial statement unless an application with that was made by central government, income tax authorities and SEBI or such regulatory authorities. Jain Limited is having turnover of 350 CR, incurring losses for past 2 years. Due to some competition, excess competition, it plans to revive in next 1 to 2 years. But the management had come across that for the year ended 31st March 2020, few transactions was erroneously missed to account for. So company is thinking to reopen its books of accounts. As per section 131, if a company want to reopen its books of accounts voluntarily, it has to submit an application to the tribunal and submit that tribunal order to registrar. Then it can reopen its books of accounts. We'll see the options given below. The position of the management is correct. No, the company should submit to tribunal first. The action of management is correct. No, the action of management would have been correct if it had taken approval from SEBI. No, not from SEBI. It's from tribunal. The action of management is not correct. Yes. Option D is more appropriate answer. The action of management is not correct. T2 CA final. Remy Limited is a private limited company converted into a public limited company, which had acquired two companies in India, one and another one in France. That is for September and January. The company controls both these companies. That is, this Remy Limited is an ultimate holding company. So the management started discussion with the auditors, and auditors pointed that they should prepare CFS. The management advised to the management what do the exceptions for the CFS is, provided the subsidiary companies and its ultimate holding or intermediary company prepare CFS and submit to register. That's an exception for preparation of CFS. Remy Limited being an ultimate holding company, it cannot claim any exemption to prepare CFS. So we'll see the options. Management must prepare CFS. Yes, right. Management has a choice not to prepare. No, it did not have a choice because it's not a subsidiary, and its members cannot provide in writing that they do not question the company for not preparing CFS. Management could have prepared CFS after it completed at least 1 year of acquisition. No such provisions in Companies Act. Management must prepare CFS, but include only company acquired in India. No, whether the company is acquired in India or outside India should include in CFS. So option A, management must prepare. Hey Samfam, this is Ria from Samaya, MCQ 43 CA final. S Private Limited is having statutory auditors for past years giving clean reports. This year they did not agree with the revenue recognition criteria and had agreed that the auditors would qualify their report, and also auditor wanted the management should give a detailed explanation in notes to accounts, which management refused to do. Can the auditor give disclaimer of opinion? No. Can it give emphasis matter paragraph even after a satisfactory explanation in notes to accounts? No. Can it give can that explanation would be not beneficial for the company? No. Now we'll see option D. The requirement to give that is beneficial for the company. Yes. And in that case, qualification, after giving a qualification, it need not hold the report if the management does not highlight such matter in notes to account. So option D is more appropriate. Hey Samfam, this is Ria from Samaya, MCQ 44 CA final. A significant deficiency exists in travel reimbursement process. This was previously communicated to TCWG, but they have not taken any remedial actions. No remedial actions were taken, and the auditor of opinion that this year they need not communicate. No, it is not right. Option B and D carries no options. We'll see which is more appropriate. No, option B, no, the current year communication may repeat the description of previous year communication or simply refer previous year communication. Okay, this is right. Option D, no, it is need not be communicated again, but an oral reminder. No oral reminder should be given. It has to be in writing, letter of weakness. So option B is more appropriate. BC Limited is having fixed deposits, and the auditors asked for the balance confirmations, and they given balance confirmations from third parties. And as they did not match, the management had given fixed deposit certificates as per books of accounts, which matched with that. So the auditor had got two audit evidences, which is from an independent party and which from a management, which means more reliability is the third party. But when we have to audit evidences, what the auditor has to do is that he has to perform such alternate audit procedures in order to find which is more reliable and find out which is right, which is more correct audit evidence. So we'll see the options. Auditor should qualify the report. No, he need not qualify the report. Auditor should consider the fixed deposit. You see, qualifying report, when you get it in options, it was most like a punishment. Before the responsibilities or before the duties that auditor performs, it is like a punishment or curse. So don't go immediately for the audit report in any kind of MCQs. So auditor should consider the fixed deposit produced by management. No. Because third parties is more reliable. The auditor should consider documentation management. No, the auditor should consideration management. However, the independent balance also required to be considered. Yes. And what do they have to do? We have to perform alternate audit procedures, which is the extended duty of the auditor when you find two audit evidences. So option D is more. MCQ 46 CA final. Philips Limited is a listed company which is having subsidiaries, and it forgot to consolidate subsidiaries. So what the auditor is thinking that to give an adverse opinion, whether the question here is whether to put key audit matter section separately, even if there were no extra matters that were introduced in basis of adverse opinion section. So what's the point is that as per 701, if it's a listed entity, what it has to do, it has to write, except for the matter described in the basis for adverse opinion, we have determined that there were no other key audit matters to be communicated in our report, is the matter that has to be written. If you find no other key audit matters, to put it in key audit matter section. But for a listed entity, key audit matter section is mandatory. So option C stands true. The first one is saying it is need not required. The key audit matters, you need not require. No, that's not true. Here is saying when you don't have an extra point, you need not put key audit matter section. No, you have to put and write this paragraph. And D is saying that you have to put same copy paste the data. You need not copy paste the data, but write that what's said in option C, except for the matter, etc. So option C is more appropriate. Hey Samfam, this is Riya from Samaya, MCQ 47 CA final. What is the difference between management audit and operational audit? Management audit, with regards to the auditor's responsibilities, whether the management is getting all the necessary information to take the right decisions or not. For regards to the operational audit, to audit the operation, the how the operations were being carried out. Likewise, this is for the management. Operational audit is for the management, whether the internal controls or systems that were put in place were working efficiently or not. So operational audit is concerned with the quality of the operations, and it is for the management. And management is concerned with the quality of management and its audit of management. So the most appropriate answer is 47, option B. Hey Samfam, this is Riya from Samaya. MCQ 48 CA final. 50-50 test determination is popularly used in banking company, insurance company, NBFC company, stock trading company. It is in NBFC company where RBI identified NBFC as when its financial assets were more than 50% of total assets, when income from such financial assets were more than 50% of its gross income. So option C, NBFC is more appropriate answer. Hey Samfam, this is Riya from Samaya, MCQ 49 CA final. A Limited management is preparing financial statements as per Ind AS. It's also has to give tax audit report. In clause 13E, they did not find any kind of adjustments, but tax auditors find there were few adjustments there. So, as per tax auditors, they were material and they have to be given adjustments. Clause 13F is with regards to disclosures of disclosures with regards to adjustments in clause 13E. So, what they were asking is that whether they have to disclose or not. As per 13E, the adjustments, if they were material, they have to be disclosed in 13E, and the disclosures, whether in respect of ICDS, whether there were any adjustments or not in 13E, they have to disclose in 13F. So, this portion is right, and any disclosures with regards to ICDS have to be given in Form 3CD. And as per institute answer, it is only the material adjustments have to be disclosed in 13 clause 13E. So option A is more appropriate. Hey Samfam, this is Riya from Samaya, MCQ 50 CA final. X Limited had a auditor, had appointed auditor, and the auditor find out that the financial reporting framework of the company has no requirement for related party transactions, whether the engagement partner or engagement manager should do some audit process regard to that is what the question is talking about. Is obviously because the auditor has to do audit procedures and has to conduct audit as per standards of auditing, whether there was any requirement with regards to financial reporting framework or not. So as per 550, SA 550, related parties, they have to make audit procedures with regards to related parties transactions and disclosure. So option A carries the same thing. Even if the FRF establishes minimal or no related party requirements, auditor has to conclude or conduct that relationships and transactions with regards to true and fair presentation, and the financial statements were not misleading. So option A is more appropriate.